Hello again, welcome back to the channel. I'm Mr. Fox coming to you from DigiFox Labs. Today we're going to be talking about a couple of articles and two coins that are actually gearing up for some interesting moves. Now, none of this is financial advice. We are not financial advisors. Everything said here is 100% our opinion. So, let's get right into it. As you can see here, coming to you from the Defiant.io, Celsius CEO Mashinsky is resigning. That's right, with all the scandalous and all the interesting news that have been coming out of Celsius for since the beginning of 2022, we can see here that the CEO has finally stepped down. But now what's interesting to note is that there are interesting things rumbling in Celsius. Now, as of this publication here, as well as this recording, you still are very much locked out of your funds. You are no longer able to swap on the platform. You are no longer able to withdraw or deposit coins. Your coins are just sitting there, just accumulating digital dust. Now let's go ahead and go to CoinGecko and look at Celsius price action, shall we? Just give it time to load up here. Come on, CoinGecko, you are not making this easy for us. Here we go. Within the past 24 hours, we have seen a dip of 1% on Celsius, ticker symbol CEL. It currently is going for $1.47 with the total market cap of $619 million. Total supply is 692 with circulating 423 million respectively. The volume is roughly around 6 million within a 24-hour time period. Unfortunately, looks like CoinGecko is not giving us the chart here, but that's okay because we will be doing some TA on it. Let's go ahead and go right to that as we speak. I'll give TradingView time to load up. For some reason, we're having a bit of difficulty on our screen here. Okay, come on, TradingView. And here we go. We see here that it actually did not too long ago have somewhat of a golden cross on the daily. That was roughly around the 15th of September 2022, but it looks like it may be not holding very well. Now we can see here that its all-time high was actually all the way around here close to $10, and that was going way back almost a year ago, actually over a year ago, to be honest with you. And so we see here what is actually forming here. Well, we could go ahead and just draw some quick trend lines for you. And we see here that we have, let's see, make this line right there. All right, and then nothing really is forming. This is one of those plays where you just sit back and wait for news to happen. Now, if you are speculating, which we could give you some reason here, not financial advice, to speculate on Celsius token, this might be an interesting area just to dibble-dabble in a little bit because you have a whole bunch of support roughly around the 80-cent region, which is going to be this section right here, going all the way back roughly around since the summer of 2022. That is one major line of support, and the other one is going to be right here around the 30-cent mark. Now, again, not financial advice. We are not saying go ahead and dip into it yet, but when you look at this, and it looks like it might be going to the downside, you may want to just stand back and just wait for things to happen. If you are speculating, well, that's a different story because we see here coming to you from the Cointelegraph.com. It looks like, once it loads up, looks like FTX is reportedly considering bailing out Celsius via asset bid. Now, if we go back here, right, we see here that it's just hovering around. It's not really going up or down, and this is not exactly what us traders like to see. Investors, on the other hand, well, this would be a great time to start accumulating, maybe dip 5% in of your total amount of capital that you want to inject into Celsius. Go ahead and do that now. But we see here that acquiring the assets of Celsius would imply that FTX's intent to save the lending firm, similar to what FTX US did for Voyager by securing the winning bid of approximately $1.4 billion. The crypto exchange FTX is led by crypto billionaire Sam Bankman-Fried. SBF is reportedly considering bailing out Celsius network by bidding on the bankrupt lender's assets. Coincidentally, the information came out the same day Alex Mashinsky resigned as the CEO of Celsius. So let's go back to the charts yet again, and we can see here that is yet again quite interesting news. Now we see this wave currently right here. This is going to be your 50. and then this red one is going to be your 200 MAs. And right now, we very well may be banging our head off of the 200 MA, which that would mean bearish. Now, with everything going on, it's not too far off to consider that we very well may be dipping down. Now, once we do bang our heads off and we go to a 4-hour, because that is usually what crypto traders like to trade on. Let's go ahead and zoom in a little bit. What's interesting to note is that right now we are actually above the 200 MA on the 4-hour. And now where can we possibly go from here? Well, probably we're going to retest the 50 MA, which is going to give us a price action of roughly around, assuming that we bounce off now, of roughly around 3 to 4%. And after that, well, we just have to wait. But what is looking pretty juicy here is we have 1 and we have 2 bottoms. Now this is on the 4-hour. So again, if you want to take a gamble, that's your prerogative. But we're just going to wait on the sidelines for this one. Going on to the next article coming to you from the Defiant.io. This one is about Ethereum. It looks like more than 80% of Ethereum miners pull the plug after the merge. Ethereum Classic hash rate plunges 48% since shift to proof of stake. 8 out of 10 Ethereum miners appear to have gone offline after the merge, according to data from 2 miners, a website tracking the hash rate of proof of work networks. Data shows that many miners are opting to turn off their hardware after soaring hash rates rendered many networks supporting ETH hash miners unprofitable. I'm mining at a loss, some individuals say. So let's go ahead and look at ETH, shall we? So as we look at ETH, we see here that it is currently trading around the 1300 mark and holding up pretty decently. Now this blue line is going to be your 20 EMA, and we still looks like have a couple of more downside to go, because we see here that here is a head, here is a shoulder, here is another shoulder, and the way you measure this move is not very pleasant, because you go from the neckline and you measure to the top, and then that is where you could expect the downside, and it looks like we very well may have some more room to go down. We will be retesting this area right in this region here, which is roughly around the $1,000 to $1,100 area. That is not financial advice. That is just our opinion and a prediction that we indicate that based off of our charting experience, which we are not experts, that it may actually go back to retest that. When exactly, we don't know. But what is key to note is that even though this does look like a head and shoulders, what could inevitably happen is we go up like this, come back down, and form this, which would then form a reverse head and shoulders. That's right. We see here that that measure move will then take this all the way back up to the 200 MA, which is right now sitting at around $1,900. So we still may have a little bit more downside for ETH in the short term. In the midterm, we may actually go back up roughly another, let's just go ahead and make a small prediction here. If things were to plan out or play out the way we think they could, we see that potentially we could, if it breaks out roughly, where would the neckline be? Probably right around here. We'll probably go around 30% maximum. But now, because the bear market, usually that never happens, you want to cut that in half. So we're probably looking at about a 15% upside once we break out of this inverse head and shoulders, potentially in theory. But if you were to dibble in right now, that would be a full-blown 34%, maybe even 35%. That concludes it for today. Happy days, happy trading, and good luck to every single one of you out there.